You looking at the markets, by the way?
Sure. All right, we should be good to go here. Let's see. Yeah, we should be good to go. Here we are. Everybody hear us okay in Forex Signals chat room land? Jason and Andrew here coming at you just a little bit ahead of U.S. Open. It's a big negative news for the USD. I'm just checking that out. How you doing today, Andrew?
Yeah, good. Yeah, just looking at the same as you, looking at the US dollar. It's just had a massive move, leg up on the CPI numbers, all missing targets. And yeah, I was saying in the stream, I'm a seller into euro dollar at 109 into 109, just sort of popping through it at the moment. I don't know. I mean, this is what's changed, what's off the table. I mean, at one set of data, the June it's not gonna derail. I don't think the hike in June, that's pretty much in the market. On schedule. I mean, so I don't know if this is now. Well, in fact, while we're on, it might be a case of maybe short some of the euro dollars at the moment. But I'm doing good.
Cool.
Good end to the week. It's been a bit of a funny old week actually. Seems a lot of directions have shifted. The pound yen uptrend has sort of has moved, and the euro rally against the major currencies from last week, that's all sort of grinded to a halt. The euro's coming back down. So it's a funny old tricky old week. What's really sort of, I say it's caught me off guard. I mean, I haven't lost much money on it. A couple of trades, I think. Because my style of trading, you're always going to get that. I follow the trend until the end, to the bend at the end. And what you've been seeing, of course, is the weakening of the commodity currencies over the last month or so. Aussie, CAD, New Zealand's still weak, of course, but we've seen a bit of a reversal. You've seen oil prices bounce and Aussie bounce. Aussie now is one that someone in the room mentioned, is one of the strongest currencies out there at the moment. Right. Over the short time, over the 4 hours, and that's sort of cost me a couple of trades, but that's the way we are at the moment. So it's a funny old market. I'm quite pleased to see the back of the week. I think I've had an up week, but quite pleased to see the back of it. I'm short pound Aussie at the moment, which is all right paying for a trade I had earlier this morning.
Yeah, you got it. Same here. I mean, I posted my trades last night in the trade room, and I had the dollar yen divergence play that we took, and that one worked out really well. And one of my accounts is still going down. I took the bigger orders off at the stop, and Euro Aussie, sort of an odd thing for me this week. I had 2 stop outs in Euro Aussie, which you know me good enough with Euro Aussie. That's sort of my baby, so it doesn't happen all the way. But that's how it is. You risk a 0.5%, 1/4%, 1% per trade, and it's no big deal. You move on. The silver trade's still going good. Silver, I posted that trade idea, and I liked it. I think a lot of other people liked it too. But it's it's a grind. As silver doesn't move, it's not as exciting as some of the other currency pairs, especially not as exciting as gold. You see these 1 cent moves from time to time. What's your take on what's your take
I wish you would have come on an hour earlier, Jason. I mean, I've been busy doing some other admin stuff for Forex Signals, and I've got this sell zone marked up here in my Euro Oz that you're mentioning there, and damn, we pierced into it and I missed it. It was my sell zones, my sell alert was at 147.28, and we've got rolled over now, and that's my bias to the downside on that. But yeah, we didn't get on there. I mean, I was short Euro CAD this morning. The little bugger stopped me out, but thankfully, well, actually, I must admit, I mean, I'm full disclosure. I mean, I've got nothing to hide to anyone. I put it. I was talking on this morning's stream about the 4 pairs, or 4 currencies: the pound, euro to the downside, and the CAD and Aussie to the upside. And so there's a combination there of something you can get involved in. Playing the 2 weaker ones against the stronger one. So I took the Euro CAD short that I knew about, but I put a pending order in pound Aussie as well. I had forgotten about until I went back 20 minutes later, and I found myself, about 20, 30 pips on side. So, but I'm still in that trade. So I must admit, it wasn't something I took at the time. It was a pending order. I don't like leaving pending orders like that for that reason, because I tend to forget them sometimes. And but I'm on side, so I'm short pound Aussie. So I'm happy with that, and I'll run that into the close tonight. I'm not going to run it over the weekend. I'm going to call it a day this weekend. Nice. Not over the weekend, but because of that. But
very cool, very cool. I had two things to ask you, but first I just had to bring it up. I don't remember the name of the person who was in the stream last night during the agent session, but they said, "Is it a head and shoulders on the DXY?" And I put a little gray box around it. And it was sort of, just a flat line with a little blip on the DXY on the 1 hour. And sure enough, I mean, who would have known right after this news? But the dollar index is obviously getting crushed down to 99.20. The U.S. data, all four of those high-impact releases were just terrible for the U.S. dollar, right? The thing to think about, and this is just my opinion on things, is that even though all the numbers for the U.S. data, the CPI numbers and the retail sales, came out under expected, most of them, I think, all of them were better than previous. So, that's part of trading that I find the hardest to try to teach somebody. Is the numbers come out way less than expected. The dollar gets beat up, but yet we're still, way better than we had last month. I mean, do you have any insight on that and how to teach people that stuff?
Not so much insight, but I mean, the other thing about it is, and it doesn't come off on your newswires, but if you look at the revisions from last month's data, they've actually come in better than expected. Better. The last month's numbers, although the actual revisions have come in better than that. So what you see on your Forex factory and so forth, obviously looking weak. But if you actually look at the if you drill it down, the numbers are not as necessarily as bad, and not certainly bad enough to derail any Fed moves for next month. So and again, it's one set of data. I think the fact that the dollar has been what's happened this week, the dollar has been stuck in this range. We've had a little grind higher Monday, Tuesday, Wednesday, but we've been stuck in the 99.50 area, and it really was looking for some guidance. It was people sitting there, getting impatient. I mean, it doesn't matter if you're a big banker or whether you're sitting here in your on a laptop. You're still wanting to trade, and I think markets have been trying to grab onto something to get a hold of, and that's why I think there's been sort of almost like a coiled up spring of reaction to these numbers, which is why I think personally. The DXY now back down at 99.17. For me, that's this is I mean, if you look to the left of the chart, I mean, it's 3rd of May, it's sort of coming into this area here.
Mm-hmm.
I quite like this area in terms of, I don't trade the dollar index as a trading entity, but I look at it. But this, I think, could find support in dollar index. If you look at dollar yen, maybe dollar yen's a good one to react. Now, dollar yen, I mean, we're right into what I've considered to be a conservative entry now. My conservative entry is 113.31, and we are 113.39 at the moment. Mm-hmm. If dollar index gets back down to here, then I think I'd consider getting long. Certainly, any stops below 1280 would make sense, but I think you're going to be pretty well supported down here into 1300, 113 even.
I like that number. My longer term target on the divergence play was the 161.8 fib. So I was a little conservative. I put the take profit levels at 113.27. So that's where my profit was to short sell. I mean, we're only 10 pips away from that right now. So that's great. It's nice when I have my targets align with your areas to start to go the other way. I like that. That's good. That's good.
I mean, the 113 is a key level. And also, first time I've heard you mention the 1618 extension. It's a lovely level. It's a lovely. Mm-hmm. I look at that for targets all the time. I think that's a great little number. I'm not a big fib trader, but there's a number that I'd certainly like to put on my charts.
Right. And you bring up a good point, too. I mean, the DXY, we talked about the recoiling snake. The longer it sits there and it just grinds out, I think it was 50-some hours it was in this little zone. Same as the euro, because what is the euro? The euro dollar makes up 57% of the DXY, I believe. So the euro dollar has been just grinding. The DXY has been grinding, and the longer they sit there and consolidate, the more you're going to get that explosive move, like you said. And that's the time when I like to do my divergence trades. When the market's sort of flat and you're trying to get in something, but you got to get a calculated risk. That's where the divergence comes in for me. So I probably do 1 a week, maybe 2 a week if they're there, just averaging. Sometimes I don't do any for a few weeks. But the divergence stuff is sort of nice.
When you play divergence, if I might ask you a question, when you play divergence, what typically are you looking at? Are you looking at the 1 hour chart, the 4 hour, or daily, or?
Generally the 1 hour chart. I go down to the 15, but I look at the 1 hour chart, and then I do a swing low to the previous high, and then I get the fib extensions. And I wanted, like, for example, on the dollar yen, I wanted it to get back down to the swing lows about 113.62. And then my target 2 was the 161.8. So I usually break my order in half. Then I look at the MACD, and I also throw stochastics in there. I mean, I know they're lagging, but it's just another filter. If stochastics are over 70 or 80 and overbought, it's just another little filter that, you know, gives me a little extra confidence. So,
yeah. You know, I don't really use those indicators too much, but there's absolutely nothing wrong with them. I mean, lagging, of course, but as long as you have something uniform and you consistently do the same thing,
right?
You know,
right.
What I like about indicators in terms of talking to people that are learning the business is sometimes, you know, rather than sitting there shooting from the hip, if you like, if you've got something to base your idea on, I mean, let's be honest. I mean, you can flick a coin and get it right 50% of the time. If you can do something consistently, if that is doing a stochastic or a MACD crossover or whatever it is, if you do something uniform the whole time with the right risk reward in play and you know, giving you a slight edge and not letting your psychological mind get involved, there's nothing wrong with using the indicators. The problem with indicators, I think, I don't mean to get onto this, but we're digressing, but the problem with indicators is some people just have so many indicators on their screens that they really haven't a clue what's going on. I mean, you can find a buy or sell at every level, you know, if you put in all the indicators. So sticking to one indicator like that, I mean, MACD, divergence, wonderful. I mean,
sure. It's, what I like to do with it, like stochastics, for example, I'm not a big fan of stochastics. But what I do when I trade my divergence is if the stochastics are already sort of melting down a little, like on the dollar yen when I went short, if the stochastics are already at, like, you know, the mid-level or at 20 or 30 or 40 or 50, I just don't take the trade. So it's just an extra filter, and it keeps me out of some that I might have got in, but I don't, you know, need it to be there. So it's basically price action and MACD. That, you know, that's what divergence is. But I like to throw stochastics in, and it keeps me out of probably a third of the trades, and most of those I would have lost anyway. So it's just, you know, and I have some videos.
I used to. No, we didn't plan this, but we're talking about indicators now. The CCI Commodity Channel Index.
Yeah, I heard you talking about that this week.
I don't know if it was this week, but yeah, maybe I did talk about it.
CCI.
Yeah.
Well, you brought it up a couple times. Yeah.
Yeah, I could have been this week. I mean, I talk about it from, you know, flippantly now and again. I mean, it's one of the indicators I do use. I mean, it used to give me. You know, when I like to buy pullbacks, or, you know, buy into retracements, what have you. And the CCI I just use as a sort of a gauge. You know, if I'm trading off the 1 hour chart, I'll have the 15-minute chart, which obviously reacts quicker. And if the CCI crosses the 0 line on the lower time frame, that gives me my entries. Obviously, it only moves up, obviously, on a pullback, and it crosses back down. That's when I'd enter. So I use the CCI more than any other indicator, and the ATR, of course, everyone knows about.
Yeah, sure. Very good. Very good. Nice. What else are we looking at, Andrew? Did you have anything from the week you wanted to cover at all? Anything from this past week?
No, I was looking at gold earlier. Gold seems to have found itself a bit of support level. I don't trade gold, as you know, but certainly looking at that, I mean, there seems to be, again, this is what I said to you earlier. I mean, it's a bit of a funny old one. I mean, there's almost like a flight to, you know, safety at the moment. You've got, you know, the gold pushing up higher. You've got the bond markets are pushing up higher, which means the yields are coming down. Yields have had the 10-year bond yield has come off somewhat off its highs this week. So there seems to be a flight to, you know, and the yen was increasing this morning as well, which is again it's a flight to risk, and I'm not quite sure why it's all happening at the moment, but that is happening. Gold markets are pushed up. Obviously, oil another one, and that's had we've had a 20% drop in oil prices since since the hike at 53. We've had that pull back down at 43. That's a 20% move to the downside. That's up 7 or 8% from its lows. This I don't know what's going on. I mean, but oil grinding higher, gold grinding higher. I guess you've got to go with the flow.
Yeah, right.
Just talking about gold, I haven't got it on my screen at the moment. This is just from memory. I'm going to be talking a bit, but it's the 1236 level in gold. Maybe you can put up a gold chart.
Sure, I can do that.
And if it's
let me see.
Might have broken it now. We've had the fallout in the dollar, but no, we're still here. So the 1236.
Pull it up for you here. It'll just take me a second. Pulling up the charts is really easy with the software here, but it's always a little different size at the beginning from the Skype. So let me click this, and then let me get this centered up here. Just pull it up like this. There you go. So there's a gold chart.
Okay, so what I'm looking at really in gold is the level of resistance to the upside, which I think you're going to be testing it soon if the dollar continues its fallout. Is the 12.35-36 area, I think, or 12.36 really. If you look back to on the 4-hour chart, if you look back to the third, we had the break from 12.50 right the way down on that big momentum candle. It was like we had a big move from 12.53 to close the day at 12.35, so a massive move. But that basically the base of that candle has created a bit of a resistance level for the upside. You can see it was again tested.
Yes.
It was tested again back on the 8th. That's right.
Yep.
So this is the level I sort of keyed in as a key level in spot gold. If you are trading gold, you might want to get in on the gold rally. We like to see trend continuation, but I wouldn't be getting in at around 12.34, 12.35 because you're coming into a roadblock. That's the only thing I wanted to mention there.
Right.
I'm not saying you should short it, but if you're looking for risk reward, be mindful of that roadblock that's coming up ahead of you.
Yeah, very good, very good. Another interesting thing on gold, and I think on the last couple of streams I touched on it, but these two swing lows on the daily here. We had the one on January 27th, and then we had a few here around March 14th. I just drew a trend line up here and put this 12.17, 12.18 level on when we were, I think, way up at 12.50. And, we were talking about watching to see if it was going to bounce there or break through that level, and it definitely respected that trend line. So this longer, when you're looking at the commodities like oil and gold and silver, I feel like sometimes these longer-term trend lines get respected even more than some of the Forex markets. So can make trading sometimes a little bit easier in them.
Yeah.
Yeah.
Well, a lot of banks play it that way, so it makes complete logical sense.
Yeah. Here's the silver one too. Is there any other chart that you wanted to have pulled up with you, Andrew? While I got the screen up, this is silver, and looking good so far.
Let's have a look at pound yen. I mean, pound yen is something that once you've done the silver charts, let's have a look at a pound yen chart.
Yeah, there it is. There it is.
Yeah. You're on the pound yen now?
I'm on the pound yen now. Yep.
Okay, so pound yen now. I mean, as you know, my style is trend continuation, and you know the saying, "Trend is your friend until the end, bend at the end." I keep getting it.
You got it.
So for now, for me, I didn't get caught on this to the downside, but for me now, my bias at this moment in time is going to the downside on pound yen. I've had a wonderful rally in the last few since the election announcement, basically on pound yen. Possible time now to change direction for me on pound yen. Yeah. So I'm trying now to be playing this one from the downside. So my eyes are on that. Is looking for the entries. The logical entry which I'm not in at the moment is I've got it on my screen at 146.41 for the continuation to the downtrend. So that's where I'm looking for that pound. We've stalled at 130 against the cable against the US dollar. I think pound's had a really good run. There's everything to see on the charts that's going to signal that pound could be possibly in for a correction. So selling pound yen, selling pound dollar down to, I'm not going to change direction in pound dollar until we get down to 127, something like that, 127.50. That might come into some support. But at the moment, my bias is moving to the downside in pound, especially against the yen. Yeah.
We had this sort of plan on pound yen to. This is going back, till May 4th here. But we had the plan that if pound yen broke beneath 114.78, 114.80, that it was going to be pretty easy sailing from 144.53 down to 143.37. We were trying to, get this 100-pip move, but it never went down far enough to trigger anything. And we were looking for a bounce up, and of course that bounce up just continued to roll. So I didn't trade pound yen this week at all.
It's been a wonderful, a trendy market. I mean, so it's been great for trend continuation players. But that's really my sort of take on the market. I mean, at the moment, I couldn't. I had to pinch myself yesterday when I was talking about buying Aussie as the strongest currency, and I thought this is just goes against all the the fundamentals. RBA last week talking about in the inflation outlook and talking about the slowdown in wage growth and what have you. So I mean, they were heightened concerns about the commodity prices. This is the RBA last week, and all of a sudden, the Aussie dollar is the strongest currency. So sometimes it's a good idea to walk away from the fundamentals and just focus what you see on the charts, because you wouldn't have predicted this. Someone in the room said before we came online, he said it's a rookie question or novice question, but why is the Aussie dollar so strong? And quite honestly, it's not a novice question or a rookie question, because I have no idea how to answer it.
Yeah. Can't answer. You just, the market, I always called it the organic breath of the market. You see these pullbacks, and if something's overextended, it almost feels, now there might be a lot of science to this, but it's just my own feeling. It almost feels like whatever currency is on the move, all the energy, all the focus goes to the yen or the euro, the Aussie. And then after it gets overextended, things sit for a while, and then people change their mind and they start looking at the other, and it's just the organic movement in the market.
Yeah.
So I have your momentum meter up here, Andrew. I don't know if there's anything here to cover, but otherwise I'll bring our video back up.
Momentum meter, no. I mean, New Zealand, I am actually in an Aussie New Zealand play, and it's really offside at the moment. I'm just a few pips away, I think, from I'm about 10 pips away from being stopped out on Aussie New Zealand. New Zealand came out this week, and RBNZ had a very, very dovish really on their inflation outlook, and has knocked the New Zealand dollar off its perch. Now, the governors were saying that they didn't. It's not their intention to get a weaker currency, but they certainly got what they wanted or what they didn't want by talking the New Zealand inflation outlook really down.
Sure.
That's basically knocked New Zealand off a 7-month high, really 7-month lows now. So that's showing in the strength meter chart. Down there at the bottom with the British pound. Yeah,
way down there. Euro's peaking up, pounds there. I'm getting the hang of this thing. For those of you that are newer, I haven't used this momentum meter ever before. Andrew showed it to me, and I've been using it now for 3 months or so, and I really like it. I pretty much now don't get in any trades aside from the metals without at least giving it a quick peek.
Yeah. I mean, I've been doing it for multiple years, and I'm also, quite encouraged to see a lot of people in the room using it as well. Not only mine, but they're using other people's as well, other providers. There's nothing wrong with that. They pretty much all do the same. I had mine coded. I coded this one I didn't code it myself, of course, but I had it coded for me, a number of years ago, and I added that summary table onto it. But for me, it just gives me it gives me a good outlook on what's going on in the world, and in the Forex world, of course. So I'm pleased you're using it. It's good to see other people using it as well in the room and putting up other providers. There is one that keeps getting posted in the room. I'm not going to mention their names. That's not fair on the provider of it. But I looked on their site a couple of years ago, and they were selling their momentum meter, or whatever they called it, and a course. And if I'm not mistaken, if you sign up today, it's $14,000 for the course. But if you sign up today, you get it for $10,000. Or you can come to Forex Signals and get it for free. There you are. That's the difference here. But it all does exactly the same. We pick strength over weakness and go with it. So
sure. Very nice. I have our videos back up, by the way, Andrew. Just so you know, I think you know that we're back up here. So just so you know, just a little heads up that got you on camera. I was looking at the news coming out this next week. And in the Asian review last night, I had told traders, we don't usually hold trades over the weekend. At least I don't. It sounds like you don't either. Every once in a while we do. But just be aware that Sunday evening here, just after after the Forex market opens, about an hour and a half after, we have New Zealand retail sales. And then also Sunday night, Central Time, there's Chinese high-impact news, industrial production. We can really mess around with the Australian currency. So there's a couple things not too long after the market opens.
That's important, yeah, good.
So just to be careful on that. Next week, though, we have the employment rate out of Australia. We have the unemployment claims on Thursday. We got Canadian news on Friday. But overall, there's no big humdinger news releases next week. There's some important ones, but there's not like a non-farm or big interest rate announcement. So next week should be fairly quiet. And for those of you that have watched me trade anyway, I like it when it's like that. I like it when there's not a lot of surprises. We get those drifts where we can start getting 10 pips, 20 pips, 30 pips. There's not a lot of things shaking the markets up. Who knows what Trump's going to do? Who knows what the news is going to do? But I like it when the news, when the high impact releases are a little bit less. That's when I tend to do the best.
Yeah, I totally get that. I totally agree with that. And just seeing it, I'm agreeing with you. I mean, a lot of the stuff coming out of Asia Pacific, New Zealand, Aussie, and so forth. But not much coming out in Europe in terms of economic data, or indeed the US. We've got CPI out in next week in the UK. Another inflation number there. It's a good trend, good markets to get involved in when there's not. When people talk about non-farm payroll at the end of the week, sometimes people the markets sort of like do nothing ahead of it, and then it's sometimes stifles activity. So yeah. Yep. Average earnings UK next week. That's some important UK data.
Yep. I'm going to post a little link here in the chat, and it's going to come out 10, 15 seconds before they see us. But this is stuff a lot of you already know. But after this news came out negative for the U.S., it says the chance of a June rate hike in the U.S. is at 74%, which is down from 88% yesterday. And the chance of 2 more hikes this year is at 48% compared to 58% yesterday. So basically, there's less chance of a U.S. dollar rate hike because of this negative news. And for those of you who are newer in the markets, if you want to make it really simple, the better the news is for the USD, the stronger the stock markets are, the more everything's booming, the more they want to raise the interest rates to slow down the market a little bit. And that makes the U.S. dollar more valuable. So when you see bad news like this, you have to look at what it's doing to the chance of a rate hike. So, and I think there's some statistic, you could correct me if I'm wrong here, Andrew, but I think it's been 20 years or 25 years where when the odds are at 60% either way, whether they're going to keep it the same, cut it, or raise it, once it gets to 60%, it's like 100% likely that that's what's going to happen. So, you know what I mean? So it's like, it makes sense though, So if we're sitting at 50%, we don't know. But if it's over 60% likely, it's happened every single time for over 20 years. So that's sort of the magic number that I watch.
Yeah, I mean, I haven't heard that statistic of 25 years of that, but I totally get that. I mean, and quite often when you get 60%, then it does rally up. If you remember in February, they're talking about a 30% chance of a hike in March. And then it got to 40, 50, and then bang, and all of a sudden it's 95%. I mean,
right.
So yeah. So what you're saying is that if it's 60%, it's 100%. Exactly. Yeah.
Right.
Good, yeah.
Cool.
Okay. Well, I've got not a lot more to add to that. I'm back on this evening for the London wrap at 6 p.m. London.
Cool.
Meantime, let's see what the markets want to do. I'm just going to sit in those trades, still short pound Aussie, and let's have a look at dollar yen. Has that got a buying opportunity yet? Dollar yen.
It's right. It was right down there. It put in a low about 113.30 ish. Yeah.
Yeah. So that's my 113.32 is what I said. 113.41. So we'll keep an eye on that.
Yep.
If
I'm
he
gonna
does
hang in my silver for a while. I'm feeling good about that. I'm gonna let that one run for a while. So that's all I'm in right now. So
good. Okay. Well, if you've got nothing else, Jason, then I'm
good.
Yep. And there's any chats coming in the room before we go? Anything coming out?
Not any questions right now, so I'm gonna leave it at that, and I'm gonna call this to an end, Andrew.
Good stuff. Okay. Well, I'll see you all later this evening. If you're not online later this evening, we'll be back online usual time Monday morning. So have a good weekend.
All right. Thanks a lot for watching, everybody. Have a great weekend. Take care.